Hello everybody and welcome back. My name is Pete Renzulli. Tuesday we did Q&A Tuesday. Today we're going to take a little bit of a different twist and essentially going to be responding to some of the email conversations that I get from the mentees in the private mentor room that I run with Evan Lazarus, Andres, and Richie Nunziato. And I want to specifically touch on something that is kind of like an issue that's not talked about enough but probably should be, and that's the move over from I'm starting to learn how to read charts, I'm getting involved in the business, and crossing the abyss from I know everything I'm supposed to know, but I'm not making any money yet. It's like I see the patterns, I understand the routing, I understand the setups, I understand risk reward, and I'm looking at everything. I know everything exactly what I'm supposed to be looking at, but I'm just not converting it into money. And then the emails that we get as a follow-up are basically insinuating I got stopped out of my ideas today, and I'm probably the only person on Wall Street who got stopped out of my ideas. And I want to get to the point where you have some sort of a framework or a thought process or a structure to help you get the results that you want, crossing that abyss to consistency. Now, I know the thought that everybody would like to have, or the desire that everybody would like to have, is getting to the point where I'm one of those traders, one of the big guys that is putting up those huge numbers. Well, if you're in the trader path along the lines where you're trying to get from I understand everything to I make my living as a trader, the result you're trying to get is to pay your bills. So let's start from the foundation of where you are, which is you're not that big guy yet, but you want to be that big woman trader and the person that people come to and ask advice. Let's start with tangible numbers without something that is too far out of your reach that makes you force trades and share size and risk that maybe you haven't proven yet that you can handle. And it's very important to assess and brutally assess where you're starting from. So again, if you've seen some of the talks that I do, if you happen to be in the mentoring room with myself, it's all about revenues minus expenses. And far too many people take more risk, which is a trading expense, than your business, your trading profits can pay for. So again, if you translate it into business terms, it's somebody taking on an office too big before their business has enough revenue, or somebody expanding their restaurant without having the revenues to pay for the expansion. Now, here's the thing. When I'm talking about having that revenue to expand, to allocate, to pay for bigger expenses, which would be bigger risk per trade, I'm not talking about you had a good week. I'm talking about you had a good multi-month run. 3 months, 4 months, 5 months where my P&L's there. I'm making money. This is not luck. It's too many different market conditions, and I'm okay. I'm doing all right, and now it's time for me to, maybe bring on another employee, which would translate into maybe multiple positions. But I can't stress enough, don't do that until you can generate revenue consistently. Stop listening to what everybody else is saying. Stop caring about numbers anybody else might be putting up. That's great to hear. It's aspirational. But you need to be able to get to the point where you can prove to yourself, I know what I'm looking at, and I just took money out of the market for a month, 45 days, 2 months. Now you got something working, and during that whole time, you should be making a list of what's working, what's not working, what kind of conditions you like, what kind of conditions you don't like. So I'm basically going to read from an email that somebody sent me last night without mentioning the name, and I think a lot of people fit into this category of, I know everything I'm looking at, but I don't think well enough as a winning trader to cross that road, abyss, whatever you want to call it, to get to the other side, to go from I know what I'm looking at to I know how to run my business and I make some consistent money. So if you could just bear with me while I read some of the email. And the email that basically came in was, everything I did today was according to my plan, but then I got short and it ran in my face. I got long, it went down, and I didn't make money. And that's a trader who's struggling with one of two things. They're either struggling with their strategy or their conviction to follow through on the strategy. So assuming you have a strategy, then it's a question of believing in my strategy works over time, because to think like a winning trader, you have to believe, it's imperative you believe in your edge over time, not on a trade-by-trade basis. To get the results, to get the desired goal that you have to judge your results over time. So I'll get a little bit into the email. We'll pick it apart just a little bit. So hopefully you guys can watch the video, pause it, write down the various things. I have like 7 or 8 things in here to briefly walk through, but the ending is the most important, all right? So first I want to, basically what I wrote is, I appreciate you writing me. I cannot tell you how many people we reach out to that are in the VTF, that are in the private VTF, imploring them to write to us and ask us a question, because if it's just us talking at you without you coming back to us and having a back and forth conversation about something you need to learn, not what everybody needs to learn, what you need to learn, it's only going to be us giving you general advice and not specific trading, strategy, tactic, thought process advice from a mentor to a student. So the first thing is, I appreciate you writing back to me. I can honestly help and want very badly to do so, but in my opinion and my experience, which I'm doing this now for 12 years, the majority of traders, for whatever reason, keep looking for the Holy Grail when they already have more than enough weapons to earn a living. And I feel that wholeheartedly. The training scenario for anybody getting involved in the business is first you learn what you're looking at, and then the path of many different trading environments is really where the training starts. It's the first you understand the material, but that's just the indoctrination. That's the orientation to what you're supposed to look at. Then you need to get behind the wheel and get into different conditions. All right, so I put, as you correctly put in this letter, it's all about you at a certain point. So the thing I was addressing here was, this trader did not say they got me or they were out to get me or why me. He essentially said in the email, what am I doing? Which is enormously important to getting to the point where you can start to cross that pattern where you're taking responsibility for the results. When you start getting into, they ran my stops, the specialist was out to get me, all of that stuff, you're not in control and you're not taking responsibility. So I'm addressing that he took responsibility and actually, obviously, finally sent in an email for some help. So I put, I personally have gone through everything you're going through right now, and the best I can give you is this advice. Number 1, don't trade any more than 300 shares maximum ever until you can string together 2 consecutive months at least of net profits. Now here's what comes back. Well, how am I supposed to make a living? Well, here's the thing. Everybody's going to have a trader tuition that they pay to the market. Everybody. How much that tuition costs is up to you. Do not size up until you can generate revenue. Now, I was very specific in here. I said a couple of months. If you feel like you know what you're looking at, give yourself a couple of months to show you can generate revenue. Not I had a good day and you're skipping out. Months, different periods, different volatility, different conditions. Now you start to develop that confidence bank up here where you start to say, you know what? That was a lot of trading. That was 8 weeks of trading. Maybe I'm onto something here. Now you start to develop the conviction. Next, number 2, intraday trading specifically. Don't be so quick to add to a position. If you've worked a good trade and the stock, let's just say for argument's sake, has $1 ATR, $1 average true range, and you worked the order, you were patient on the entry, you got the right price, and now the stock is 75 cents in your favor, and you have these delusions of grandeur in your head that it pushes up, went up, this is the trade, I'm going to make all my dreams come true on this trade. You know what? Make $1 on the trade. You don't have to add and get maximum share size and keep tearing into it. Make money. Earn while you learn. Don't be so quick unless you have an unbelievably perfect storm of the broad-based market, the sector you're in, and the stock, all doing exactly the same thing, and there's a lot of money flowing in or out. If you work the order, you were patient for the order, don't add to it. Make $1. Don't decrease your average price of the trade, and then it pulls back a little bit, and you're scared out of the trade, and then you're mad that because you added, it brought your average price down. If you work the order, plan for the trade, earn while you learn. There's nothing wrong with making that full thing on just your first piece, all right? Number 3, this is very important. Don't trade anything not in your plan in the first 2 hours of the day, and you can reevaluate in the afternoon. Now, this is one of my biggest pet peeves. If you have 12 hours to plan for 9:30 in the morning, let's say from yesterday's close, don't tell me or convince yourself. Somebody next to you calls something out, somebody in the VTF calls something out, or something pops up where you had 3 seconds worth of evaluating whether it's a good idea. You put it on, and that's a trade you're going to make money on. Run your business from the first 2 hours of the day 9:30 to 11:30, off of what you spent a lot of time meticulously planning. I want to be long these stocks. I'm looking for these significant levels, or I want to be short these stocks, and I'm looking for these levels, and it's going to mean something to me if we get to those levels. Number 4, if you earn good money, now obviously good money is relative to everybody, for your share size in the first 2 hours, stop for the day. Stop. Yes, we'd all love to print money from 9:30 to 4. If a good day for you is $500, I'll just throw a number out there, and you're up $500 at 10:30, do one of two things. Scale back significantly on your trailing stop. So in other words, if you go from 500 to 400, you don't want to go from 500 to 0. You want to walk every day building up that mental goodwill in your head and book it, book it, book it. Let's throw something out there. A mortgage payment, a car payment, and 2 vacations. Let's run $50,000 for the year. Let's just start out with some significant stuff like that. Put a number out there. That's $250, $300 a day consistently. Prove to yourself you belong in the business. Not I know what I'm looking at, prove it. All right? Mike Lee, Steve LeVay, 2 guys that run our momentum trading course and the mentoring room, flat out, done. Booked the profit, walking away, and Mike Lee probably worded it the best. Respect the fact that it's real money. I need to pay my bills. So learn and earn first, and you'll understand the conditions to size up. So don't be embarrassed. Don't be afraid. Pull back and be like, you know what? Real money. I'm walking away. I'm keeping it. I'm putting it in my pocket. Next, number 5. Admit where you are and brutally assess all trades so you never trade the WTH trades. We call those in the private room the what the heck trades, where you're looking over, like you see something and you see like a flag, or you think you see a flag and you put a trade on and it's clearly not one of your A trades. Maybe it's a B trade, maybe it's a C trade, but you get out of the trade, you take the small loss because you had very little edge and you're like, what the heck was I doing? And I clean that up a little bit for the video, so it goes through compliance. Stay away from the WTH trades. Only trade your A trades. And what we talk about all the time in the game plan meeting in the morning, you're going to have losing trades. You want to exit your trades and exit the trade and say, that was my trade, it was a good idea, it just didn't follow through. You want to write this down. You want to lose money on good ideas if you're going to lose money. All right, next. Stay away from the first 10 minutes, especially if a stock had a huge move in that first 10-minute window. Because think about this. The stock flies, I'll say flies relative, goes up $1 in the first 5 minutes and has this huge green candle in the first 5 minutes. I can't wait to get long. I can't wait to get long. I came into the day, I wanted to get long. Well, what's happening? How are you going to manage your risk? $1 the other way? Let the stock settle a little bit. Now, 10 minutes is just an example. It's some sort of structure. But the point I'm making here is you need some sort of reference point to manage your risk. So you have this enormous volatility in the first 5 minutes. There's going to be coming a little more risk with that because you can't manage your risk other than being shaken out of a trade because of a dollar amount. All right, next. And these are very important points within this here. All right? Learn to accept the uncertainty of each trade. Very important 2 points there. Accepting the uncertainty. Nobody knows what's definitely going to happen. All we know is to set up probability. So I'll read the whole sentence and then we'll get a little deeper. Learn to accept the uncertainty of each trade and be okay with the fact that anything can happen. New traders don't understand this because they come into the business and they say bull flag, bear flag, breakout, support, resistance, those work. Well, I got news for you. I've written trading books. Sometimes it could take a week to find the perfect pattern you're going to put in the book. Patterns are probabilities, part of the probability. Anything can happen. So I'm going to read that again. Learn to accept the uncertainty of each trade and be okay with the fact that anything can happen. Now I'm getting into myself personally here. If I have a bad day, I immediately determine one of 3 things, which we all have bad days at some point. Number 1, was I trading, I put something like a dodo bird in here. I worded it a little differently, so I'll clean it up here. Was I trading not smart? Number 2, was it a tough, choppy, light volume day and good ideas simply did not follow through? Or number 3, did I trade good ideas that simply did something not normal, and this is, I'm going to elaborate on this a little bit, that did something not normal, for example, stocks going higher 8 days in a row, I will continue to trade my strategy, flawlessly because my edge is where my strategy is. So I'm going to repeat that again, and then I'll get into 1 or 2 points here. Did I trade good ideas that simply did something not normal? For example, and again, just an example, stocks going 8 days in a row in one direction. Now, we all know it's usually 3 to 5 days, 2 days back, 3 to 5, whatever. 8 or 9 days in a row, if your strategy says to do something differently, like maybe not continue to get long and the stock continues to go, it's more important to follow your strategy. So we assess those 3 things. Did I trade poorly? Was it a tough, choppy market that didn't follow through? Or did I follow my strategy and just something not normal happened and I accept it because I make money by applying my strategy based on what normally happens? So again, this is about the result you want to get. You have an aspiration to become a consistently profitable trader. Winning traders assess their day based on those 3 things. Did I not pay attention or did something else happen? All right, so we'll get into that a little bit more. Number 1 is my responsibility. It's my responsibility to recognize and stop if I'm trading like a dodo bird. Number 1. Number 2. Number 2 is also good trading. If I put on ideas according to my strategy but don't earn money, that's good trading. It just means the ideas didn't follow through. That's how winning traders think. Did I follow my strategy? Number 3. Number 3 is also good trading. If I put on a trade and then a stock or a market does something completely abnormal, for argument's sake, whatever that could happen to be. And I'll just use a Bollinger Band as an example. If a stock goes up to a Bollinger Band, normally 80% of the time, that's where it slows down. I'm not saying I used it, I'm just giving an example. And it continues to go for another 3 days. Or if you use RSI or stochastics and it gets pegged at 100 or 0 for days, okay? That's not normal, but we're trading for what normally happens. So if your pattern unfolds and a stock continues to do what it doesn't normally do, it's still good trading. Winning traders are devoted to their strategy over time. So now I'm going to get a little bit into what happened to me personally over the last couple of weeks to illustrate the point and how, I'll say, I'm a winning trader, how I feel the proper way and is proven over time what is the proper way to handle that for you to have conviction and belief in yourself, okay? All right. What I basically wrote is I personally had a few tough days on my strategy for probably 2 days of this week, okay? Maybe 3 days. But made a good portion of that money back the next couple of days sticking to my strategy. Prior to the couple of days that I just had that were tough days, I had 11 days in a row where I made money. Now, here's the thought process. And I actually talked to a couple of traders in my mentoring room about this in the morning. A couple of days that I didn't earn money but stuck to my strategy, they were all jumping off like it was the Titanic, jumping off the boat saying, no, this doesn't work, and et cetera, et cetera. You have to stick to your strategy. So then when the strategy starts to unfold again, it's the law of large numbers. If you manage your risk, your strategy should produce money for you over time if you manage risk. So making money 11 days in a row and then having 2 tough days, you can't say on the 2 tough days, does what I do work? You have too much data. If you've worked hard on your strategy to say my strategy works, just right now it's not following through. So go back to those 3 things. Was it me trading like a dodo bird? Was it just a tough day to trade? Or did I do what I'm supposed to do and something abnormal happens? You should be mostly focused to become a winning trader on following your strategy flawlessly, provided you have a strategy. And then prove to yourself over a couple of months. And if you have a couple of bad days, assess what had happened, you, the market, or et cetera, as we just went over those 3 points. So I wrote in there, it wasn't luck I had those 11 days in a row. I believe in my strategy, managed my risk when it didn't follow through, and then the following few days when my strategy unfolded, I made the money back. And that's how winning traders think. So to sum it up here, get yourself out of judging your results on a trade-by-trade basis. It has to be results over time as your strategy unfolds over time and not every flip of the coin. It has to be, for you to have the winning mindset, you have to believe in your strategy all the time. If it works and you have a couple of tough days, scale back a little bit. Now here's an advanced tip. If you're trading your strategy, and let's say like I did, and I should have recognized it sooner, but I didn't. You have 11 days in a row like I did, and you get to a point where you're like, all right, today was a grind. Something different was going on there. And then the next day comes, and not only did you lose, you stopped the streak, but then the next day you lost a little bit of money, and your alarm should be going off and be like, all right, we might be getting into number 3 where something abnormal might be happening here. So it's your job to recognize, are the conditions changing a little bit, or is the rubber band being stretched a little bit further than what my strategy says I should be getting involved now? And if it does, my advice is to just scale back a little bit until your strategy starts to unfold cleanly. And one last thing, a conversation that we had today, it was in reference to holding a losing trade. Now I want to give you a little mental thing that I use with myself. If I catch myself holding a losing trade, I admit it's a losing trade, it's clearly not a losing trade, it's clearly not working out, but I'm still holding it. Here's what I do. I literally say out loud to myself, I can't believe this is the only trade I'm ever going to have an opportunity to make money in, so I better hold on to this one. And just even saying it, it sounds ridiculous. So if you catch yourself saying that out loud, where I have to hold this losing trade, I'm never going to have another opportunity to make money in a stock ever again, pull the plug on the trade, because it's just ridiculous to have that thought process, and it's the only reason you would hang on to a trade like that. Your ego is telling you you're right, the market's wrong, and you're believing it's the only opportunity. So if you're holding a losing trade and you clearly know it's not a good trade, kick it out. It's not going to be the only trade you're going to have opportunity to make money in. Watch this video a couple times. We covered a lot of stuff. Have a great afternoon, everybody.